Hey everyone, Nick here doing a midweek recap after the first couple of days of the year. Since we had red ticks, I think there might be some confusion because we got used to green ticks. So it's a little check-in with the levels. So I'm going to backtrack to the video I did on Monday night before the week started. And part of it was focused on the IWM, the small caps, the RUT, IWM, the Russell 2000. This is the ETF. This is a daily chart, and you can go back and watch the video, but the gist of the story was this cut out. I took a picture of it from the video, and my question was, yes, we know everything about the SPY and all of that, but I want to focus on how the IWM behaves because it's a basket of 2,000 stocks, regardless of how small they are. And the question was, can they get to 1 after a red tick on Friday? That was Friday's red tick. Not a lot of red tick before that. This is the Powell pop on the Fed meeting, and we had a red day on Friday. And we about a week earlier we had a similarly red day, and I said the last time it happened they made a higher high. So I said, can they repeat that performance and get to 1 to make a higher high? Or if they don't, will they get to number 2 because that's where they should go? And if they get to number 2, will they be able to bounce to number 3, and will it be shortable? Okay, so can they erase 1 bad tick? And if they don't, will they get to number 2 before they bounce to number 3, right? So fast forward to now. So these are the same candles. This one is that one, this one. So they did not get to number 1 up here. They did not make a higher high on after Friday. They dropped. The candle wasn't too bad, but they had a bad day. And they gapped down and they had a really bad day. What do I mean? They gapped down today on Wednesday and they closed almost on the low of the day. They opened here, they didn't barely try to rally, but they just collapsed and closed on the low. So we almost covered the gap to the top of the candle of the Powell thing. So now the question remains, can they bounce to number 3? Can they bounce to number 3? And if they do, I bet you they will find resistance. Okay, so that's the big picture. This is a daily chart, so it's nothing fancy. Based on this red thing of this daily chart, it says likely they're going to look for this area, which would make sense. Then they would erase the Powell candle. That is the Powell candle. We'll call it P. Okay? And then what happens? So now, tomorrow, Thursday, can they bounce? And if they bounce, will they find resistance to do this? And will they head towards that area down there? So I'm thinking we're already selling rallies in order to get the answer to that one. So why am I focusing on this? Because I want to give us a mode. What are we doing? Are we chasing rallies? Are we buying dips? What are we doing? And the easy answer is that I think we're selling rallies inside of a descending channel. I think now at least 3 days of red in this market of 2,000 stocks. And so it gives the bears some comfort in selling rallies. Levels wise, I think if we rally in the next couple of days, on Thursday and Friday, if it's not bigger than 2%, I think it's easy for us to bleed lower. We've hit some of my targets short term, but I think we also opened the door for erasing the entire P Powell candle that we just labeled. I think the better support is at 189. I think the bottom of the P candle is the better support. So until we get there, rallies I wouldn't chase. I would use to fix problems if I'm long. And I already booked a lot of profits, and I'll probably come up with a list. But basically, every credit call spread I shared, except one, went my way. And this is a good start for somebody that has been ready to see some red. And that was the mindset we were with. I know it wasn't a popular opinion, but it was the right thing to do. And the first couple of red days of the year doesn't say that the rally is over. It just says that we could use a little dip to establish better footing. In other words, what's wrong with taking out this candle and come down into a better set of buyers? So then these new buyers will have better conviction, and they can then try to do whatever they want on the upside. For now, for the next couple of days, I'm looking for rallies and reasons to say, okay, they're going to hit a level of resistance after the rally. So keep that in mind. The goal of this video is to stop the hope. That's what happened at the end of 2021. This is not a revision of it, but the mistake was newer traders didn't realize that we're now selling rallies, and they kept trying to buy dips until they ran out of money. So we realized the trend may have changed, may, to sell rallies. At least on the 30-minute, it's evidence that it is selling rallies. On the 1 day, it is definitely not. We are still going up, up and away, right? So that is the nuance that a lot of retail investors miss. Hopefully, we're bringing enough eyeballs on it right now in order to avoid the mistakes of most retail investors.